Hi guys, my name is Roman. I'm the founder of Krüpto Klubi, a crypto community in Estonia. The video you're about to watch is a recording of one of our events. Redcurry is a new cryptocurrency that is backed by real estate. Watch the video to see the team explain what is Redcurry, how does Redcurry work, and how it's eventually going to change the world. If you enjoy the video, feel free to like and subscribe. If you have any questions, just leave them below in the comments. Happy watching.
Thanks. Hi, everyone. I am Neeme, one of the co-founders of tokenomics. And I'm here with almost big chunk of our team, Asse and Kaspar and Mari. And one of our co-founders, he's based in Austria. He can't join us. And then we have a couple of more team members on marketing and so on. Glad to be here tonight. We are quite early in that sense that we haven't actually spoken about the project in public before. We just recently started posting on LinkedIn that what we have been up to, like over the last several months. We are now just coming out from the labs in that sense. And today I'll do a little intro what is tokenomics and our first currency Redcurry about. Then Asse and Kaspar will join me to tell a bit more about the tech side, how the whole thing works, and also where we are heading with the whole project. We have a DAO in mind in all of the things, and then we also probably discuss that how you and everyone can join the journey. So, well, as you can read, it's about liquid store of wealth. Tokenomics' vision is actually to solve the issue of real store of wealth, and Redcurry is our first digital currencies. So we see that there are other opportunities in the future, and how we came to the idea is actually from our own experience over the years. My background is actually 20-something, almost 20 years in real estate on small scale. I've been managing investments and real estate for other people, mainly running a small real estate letting agency. Then Kaspar, we have worked almost 5 years now together, and then he's our tech co-founder. Asse, well, probably many of you know him. He's has the crypto background, and then is one of the co-founders of the Krüpto Association. We also have been now working together a couple of years almost. And then the fourth co-founder, Dejan, who is based in Austria. He's also kind of our author of the idea. He has the deepest knowledge about economy and then real estate among ourselves, us, and we have the idea was actually born already almost 3 years ago, and out of our own basically needs and Dejan's needs first of all, and then he being deeply in real estate, he's head of a big family office in Central Europe, has always struggled with a problem that, okay, when you are in real estate investments and then let's say you need to exit one, and then you are looking for another one to enter, then in between these investments you might need to stay in cash for months, maybe more, and you don't really want to stay in cash, particularly what we have all now suffered from during the high inflationary periods in the economy. Same thing for me. I realized when doing smaller real estate investments, it's quite a pain to actually be in between the investments, keep your liquidity in cash, and then that's where the whole idea was born from. And then being in the midst of the COVID, when we got to know Dejan, were introduced through a mutual friend of ours, we realized that, okay, when we take this instrument and then combine it with crypto and blockchain, we could actually create something that could fight the problem we all were facing already. We're realizing that, okay, this debasement of money and I can just to when the whole big money printing started during 2020, and then we realized that, okay, that won't end well. Probably not the debasement itself is not directly, it doesn't translate into inflation, but inflation will follow. And regular people just don't have the same access to the investment vehicles like family offices, and then we realized that that's something that needs to be solved for ourselves and everyone in this room or in the world. And that's how we kind of decided that, okay, all in, this is something that we need to sort out. And why then real estate as a I'll say instrument invest or like asset to back our digital currency with? It's particularly Central European commercial real estate is one of the most stable asset classes, actually. And when we compare it to why not like precious metals, then first of all, they are not very stable. Yes, in long term, they are said to follow also inflation curve, but they always have a cost with them to store, and then it's not very easy to actually enter gold directly. So then you have your own safety issues, etc., etc. But real estate, commercial real estate, generates money, and then therefore doesn't have a cost to store. But now, why not then real estate itself? But real estate, high quality real estate investments are not easy to enter for everyone, and not to mention the lack of liquidity in the transactions themselves, and then the time it takes to actually find proper real estate investment, etc., etc. And then, well, the whole, let's call it securities, but it also we could discuss also forex markets. Then same thing, the Robinhoods and then all the similar platforms, super nice products, they have their place, but by the end of the day, they are not the place for regular folks to store their liquidity. There they are, let's say, all the risks are on them, and then it's super volatile. Investing in stocks, definitely you don't store your liquidity short, mid-term in stocks. So obviously, yes, okay, part of your wealth as an investment decision in index funds, whatever, sure thing. But we are not discussing investing in such, but storing part of your liquidity and then hedging against inflation. And in this case, securities are not also the best solution. And yep, that's kind of the reason why we went for real estate and then chose this asset to back the whole first digital currency.
Sorry,
we can actually keep it very informal. So whenever someone has a question, just shoot away, and then later on, when Asse and Kaspar will be on stage, then
there is a question online, like, did you do any research before choosing real estate as this, or was it
like
kind of
research in terms of comparing to other assets, or let's say we have done a lot of research. Our own experience in real estate is quite extensive, I dare to say, that we know what real estate is about and particular categories in real estate, etc. So, and this is not the answer to this question, but yeah, there is an extensive research behind the whole project in terms of legal analysis, etc., etc. So in that sense, yes, but that made kind of ton of sense for us to start from real estate, although we have already other ideas that where we can go with it, the whole model, where we can take the model, but real estate is the kind of asset where we have the most experience ourselves, and then in that sense made sense for us. So what we tried to achieve with Redcurry is basically the idea is that it will be a store of wealth and become a basically method of payment by the end of the day. So we are not tokenizing real estate. We are not a security by the end of the day. The Redcurry is always pegged to the net asset value of our real estate portfolio, and that's how that all works. Kaspar will tell you in a bit. But basically, when cash enters our system, we invest it into real estate. We mint Redcurry, and we keep Redcurry always pegged to our portfolio. So basically, one Redcurry is worth portfolio value divided by our Redcurries in the circulation, and Redcurries can only be minted, new Redcurries, when new fresh money enters the system. We make new real estate investments, then we also mint new Redcurries at the previous net asset value, and all the money stays in the system, rental yield, I mean, increasing the value of the portfolio and therefore Redcurry.
What's your service charge?
Service charge, there is no service charge in that sense that when you just use or transact it, then the service charges are either what the exchanges charge you basically by the end of the day.
I invest, you need to buy real estate. You have to work for it.
In that sense, okay, in the system, yes, we have, and then that also then keeps the whole ecosystem running. Eventually, we have a small, basically, let's call it then management fee, which is charged against the rental yield that actually comes from the real estate. Then there another revenue stream for the ecosystem is small transaction tax built into the token contract, but this is microscopic. It's similar to, for example, some gold tokens. It's like 0.02%. Then in real estate transactions, when we buy new properties, the ecosystem can make a bit of money with asset managers and charge like one-off fees there, and then there are like a token liquidity fees where Asse goes into the DAO side and how the whole system provides liquidity on the secondary markets. Then we will own our own liquidity. Others can obviously provide on decentralized markets liquidity too, but our ecosystem owned part will generate us liquidity provider fees. So these are the kind of main revenue, so-called revenue streams for the system that keeps it up and running. But eventually, the whole idea here is that we want this system to, how to say, outlast us, ourselves. The whole thing is heading towards decentralization. It obviously starts with centralized bits. It needs to get off the ground. We need to kickstart it and then get it running. But gradually, we will move towards decentralization. And then the backing mechanism itself is kind of like incarnation of decentralization with old world. It's we use basically the private foundation as a holding, the kind of parent structure for the holding company, and this by nature is ownerless. We renounce the ownership of this foundation, and this foundation has a board. Board follows the deed of the foundation, which is like the Bible for the whole system. It cannot be changed. We can leave there a little option that initially we can make, let's say, 1-2 changes at some point we need, because we don't foresee everything. But eventually we can't change it anymore. And that will kind of write into the stone the basic main rules for the whole setup. And then there is a holding structure that will then hold the real estate investments and mint the Redcurry, basically. And then there will be DAO structure, which Asse will tell you a bit more about later, which is also we obviously will have a legally set up DAO. We can't have it won't be a Cayman Island or whatever set up, and then that will have a certain influence over the board, and then will be the watchdog of the system on its own, and manage the treasury, including the liquidity for the Redcurry and other currencies in the future. Yes, sure.
You have a question.
Piggy, flying piggy.
What do you need to consider on the legal part? Okay, if you accept only crypto deposits and pay out crypto, then okay. But do you deal with the fiat as well in some way, or no?
For example, when you want to buy a Redcurry initially, or in what cases?
I really it's hard to understand the idea. The idea is that you have a bunch of money, you make investments into some apartments or houses.
No, I'm only commercial real estate. Rent generating commercial, high quality commercial real estate
in Central Europe. Then
Central Europe, well, it probably will include other parts of Europe too, but the main focus is on Central Europe.
As I understand, then you have some legal entity that kind of governs it as well.
Yes, well, so basically we have a foundation, then we have the holding structure, and the holding structure will hold all the real estate investments, be it direct real estate investments or shares in carefully selected real estate funds. So we will be kind of fund the funds.
So I don't really do anything related to real estate. So
it's an old and boring asset class, biggest in the world.
But is there some legal considerations that you need to deal with?
Yeah, sure. It's well, hence that's the reason for this kind of complex structure to set it up. Mm-hmm. To provide all transparency and security by the end of the day. But the basic underlying idea is that the foundation is a full owner of the real estate assets, by title book or through fund shares. So it's all traceable, transparent, who owns what. And then because we own the properties that back the Redcurry digital currency we mint.
Kind of already get.
Mm-hmm.
But do you need to
what's the legal part or compliance side? do you need to deal with it, or it's not really?
And of course, we need to deal with it. It's part of the whole financial system. By the end of the day, how we have designed it, that we try not to become a security. So basically, and then how we achieve that is that we do not give direct ownership through our token to the real estate or any piece of this real estate. And then the other side, the important side, is that we do not deal directly with the end user. So you cannot come directly to me, say that please sell me 1, 2, 3, whatever Redcurries. There will always be regulated, licensed financial partner between this transaction. It's either a money service, some sort of exchange, money service provider, broker. So there will always be a licensed financial partner in between.
Okay, cool.
Yeah, that's.
Thanks.
Yeah, right. That you said. If I buy the Redcurry, I don't own the real estate directly.
Yes, directly not, because the ownerless structure owns it in the title book, by title book or fund shares, and then the Redcurry token basically is backed with a promise that if this portfolio is liquidated, then Redcurries are all bought back for the whole asset value, net asset value, by the whole foundation and its holding structure. That's hard written into the deed and cannot be changed.
I also have a question.
Hey guys, join to this panel then, and then if someone asks technical question, then
okay.
Yeah,
I hope right way. So as I understand, you offer a token, right?
Yep.
Token which should generate some kind of revenue to the token holder.
Token holder, no. Revenue does not come directly to token holder. The revenue that real estate, the backing real estate generates. Yep.
If I buy your token,
yep.
What it gives to me? So it gives like annual, I don't know, return investment or
increase in value.
Increase in value. So it is like
through the increasing value of the real estate portfolio backing it, but we do not pay the yield directly out, because that's another issue with.
That was my issue, that you already told that you want to avoid like to becoming a security token, and I want to understand
exactly
that this token will not be a security token, because otherwise we'll need a license.
Yeah, exactly.
Okay, so you would just keep like regulated entity or something between, right?
Yes.
And this entity will be like Estonian entity or from other, because the legal regime in different countries are different.
Sure. And then considering our geopolitical situation as well, we have to take everything into consideration. Now, our parent structure is actually based in Austria.
Okay.
But the holding structure, part of it, at least in the beginning, we still dare to keep in Estonia due to the tax reasons in that case, and because obviously the profit taxes here are favorable.
As a possible end user, as a token buyer, I want to avoid the situation, for example, when I hold the token and then at some point some regulator will find out, or they come to opinion that you offering like investment token, but you don't have a license, and then the legal trouble will start.
But this is the beauty of the whole thing, what we create, that we don't create any value from like thin air. So by the end of the day, if someone decides, let's say a few years in, let's say, I don't know, 5 years from now, comes and then, I don't know, comes with full power, comes on us, says that now you have to close it down, we will close it down. The liquidation by the deed, by law, means that all the tokens will be bought back and money goes back to the token holders. And that's it, with all the value it has gathered meanwhile. So everything needs to go back to the token holders, and that's it. Full stop by Austrian law.
Yeah, actually, just one criteria how the token becomes a utility token is that when this token can be both sold on the secondary market. That is my concern. If this token will be listed on some kind of exchange, so this is like one criteria the regulator might consider as a security.
Yeah, we have spent a ton of time on it, and we wanted to add.
Yeah, it's something that we are working with also, but you have to consider that we are building a means of payment. So when you can now use this means of payment on exchanges or in some sort of point of sales, then it's hard to say that due to that reason you're secure. It's not that fresh cut, you know. You can't just say that because it's traded on the market, it's secure. You can say that it's a means of payment, so people can use it to trade also. Like you can have a Bitcoin Redcurry pair, just like you have a Bitcoin USDT pair.
Within your own ecosystem is okay, but if it goes outside your ecosystem, you will not convince at least Estonian regulator that it's not a means of payment. That if it's means of payment, that is automatically become a security token. This is how the regulator approached it. In Europe as well.
Anyway, it's not like fully sure yet. There's a lot of gray areas, and it will be more certain in the next coming years from the regulatory side as well. And how do I see that is that there has to be some kind of middle line there decided. Because we can't put like every token which is available on public market, we can't say that they all are securities. That's like nonsense and insane. So there has to be some like fine line somewhere. And currently the approach from the regulatory side is that let's do analysis and let's see, like take like parts, like pieces, to put the pieces together, and let's see where it goes more. And we have taken that approach that we try to find our way in that gray area to not becoming the security.
So far so good. The legal analysis shows the latest copy of the MiCA. We're still going through to be 100% sure, but so far so good.
A quick question: what's the timeline for launch, or have you launched already?
No,
we'll get to that timeline. Sorry.
Yeah, no worries. Yeah. But maybe yeah. Then Kaspar will tell you a bit that how the whole system technically works, and then Kaspar gets to Asse gets to the timeline part and tells you a bit about the DAO system as well.
Yeah. So I wanted to speak about two things when we talk about Redcurry today. One is about why we are using blockchain at all, which I get asked a lot, and another that leads us to how the whole thing works that Neeme described. So how many of you here are from blockchain industry or are very well versed in that? Could you show of hands? Okay, and the rest from traditional industries, more or less, show of hands who is not maybe so home with blockchain or is more from like traditional industries. Okay, so like 50-50. So yeah, a lot of people, especially from the traditional industries, have asked us, why do you even use blockchain? And this really ties into the previous questions also, that there is really no other accessible way for us to do it without using blockchain, because all the traditional means from the traditional finance to deploy a new asset class are mostly built to release securities. That's how it is. With blockchain, it allows us to not release a security, but to deploy a big means of payment to the market quite accessibly. And it's also a question of separating let's say the content from the medium. So when we now release this Redcurry token, it's not tied into any specific technology. Yes, we may use some layer 2 or We may launch a Polygon first or whatnot, but the point being that you can take now that asset and you can whether trade it, you can use it on different mediums. You can even go off chain. You can wrap it into different chains. You can use it in different point of sales. That's very much also why we use blockchain underneath. And then also it comes all down to our key success factors of Redcurry also, that how we measure our project success, or what we have considered as to be the key success factors. And this is full transparency. So all the assets that we have, all the supply that we have is on public ledger. Security. So let's say our smart contracts are mirroring what Neeme before said are our, let's say, the Bible, the deed of the foundational deed. So all the smart contracts are mirroring that. So even if we want to, or somebody wants to be malicious in this system, it cannot be done. And it's all public and open source. So everybody can, it's publicly auditable, and we are publicly accountable also. And it supports the natural decentralization of the whole project. So you may think that blockchains are decentralized, but it's just the technology. It's not really decentralized if the source of information comes from single central authorities. How our system works is that all the assets that we buy are published to the public ledger by decentralized group of people. And they're usually property or asset managers who don't work for us, who work for different organizations that are not directly connected to each other. They don't have special interest with each other. It's hard to conspire. So these are the key reasons that we use the blockchain underneath. So security, transparency, and public accountability and public transparency or auditability. And then that leads us to how Redcurry works, which some of the things I mentioned, which are the pillars of our whole project. And then I think more interesting stuff besides the tokenomics is the net asset value and supply. So how do we report our net asset value, and how do we report our supply? And then from that you derive the price, and then the price, the token value transports the net asset value. And so I briefly said before as well, any asset, so in our case, asset means property. It can be, well, usually property is really an SPV that has its own cash flows and etc. Right? So we have that. So we have fund shares and we have cash on accounts for certain liquidity that we need. All these assets are reported on public blockchain as the ERC-721 tokens. So in popular terminology, it's the NFTs. They are not tradable. So they're just NFTs for using the standards of 721. Every asset is reported. So each asset has its own net asset value. And then you sum that up, you get the total net asset value of the entire treasury, which is packing the currency. And if you now look at like a SPV that owns property, there's a lot of accounting data that comes in, right? So what is that information that we actually publish, and what is the information that we don't really need to publish, or it creates more noise than than signals. So now we have concluded we are looking at the IFRS standards, the GAAP, GAAP standards, and have derived around 5, 6, 7 key essential information pieces per asset that then the asset manager and the property manager all publish on blockchain. And so we don't do it. This is a naturally very much decentralized. We are building the technology for these people to publish that 5 or 7 key pieces of information per asset. And then when you now sum up all the assets on the public blockchain, which is very easy to do, and everybody can do it if they want to, they can get the total net asset value, right? That's how we maintain the decentralization part. And then that's enforced with the technology that we use, which is public blockchain. And in addition to that, we of course have auditors that are assigned by the foundation, but also we work with, when we work with Chainlink, Oracle, for example, they assign their own auditors to us. So we can't really choose that. And they will usually do their own reports. And so that's also on blockchain. So you can see the trail of some asset manager with the property manager with a 4i principle published the net asset value of a property every month, 12 times a year, and the 13th time you see the auditor's report as well. So that covers the net asset value and the transparency part of that. And then you have supply, which is, as you know, that's those people who know supply is really written inside of the token contract itself. Right? That's where you get the supply. So in our case, the Redcurry token, nobody besides our governor token, which is a separate smart contract, can change the supply. And the governor contract changes the supply automatically based on the net asset value reporting of this decentralized group of people. And the governor is really what, as the name says, the governor has the rules written into it that are derived from the foundational deed. And the governor rules are all open source. So everybody can now audit it and see if the supply is changing accordingly. And nobody else can touch the supply. And so that's the supply side. And then we get to the value of the token, which just to kind of come back to some questions here to make it very clear. This is not a token that you buy to make 100x. It's a store of wealth. It has its growth due to the nature of the underlying assets, which is real estate generating yield. But that's not the end goal here, right? You don't buy Redcurry to make 10x, right? You can speculate somewhere else. This is purely for store of wealth, for keeping short midterm liquidity available to you, and it's accessible to everybody. You can see if you go to on-chain data, you can see that in times of high volatility in the crypto markets, people are usually escaping to stablecoins, right? You can see influx, ingress, egress from stablecoins. And when Bitcoin goes massively down, everybody buys Tether. And then when Bitcoin goes up, then you see money moving out. Or with high volatility, you try to find some sort of hedge against the volatility of crypto. So, but where do you go? You really have like stablecoins to go into. But when you go into stablecoin, you're automatically exposed to the natural inflation of the dollar, but also as some of you I'm sure felt with the collapse of Terra and other stablecoins, you don't really know, especially with algorithmic stablecoins, you don't really know what they're backed with. So it's, if you need to move $1 million there, are you really would you sit there for 3 months? That's a question for each one of yourself. With Redcurry, you can be sure that it's backed by that commercial real estate, and it's not going anywhere, right? It's the physical assets backing it.
Bank run can't really happen.
Yeah, so there's no way for bank run to happen. Our concerns that we're working with and challenges, there are some, so it's not like, for example, if you are secondary markets, of course there is price manipulation. There's the question of we can see that happening every day with Tether and other stable coins where there are people who are trying to manipulate or attack the price for them to make money off that. So they're trying to off-peg it, buy it cheap and sell it later, or vice versa. So these are the challenges to working with. I don't think we have the time to go into that today, but basically we are looking into dynamic transaction costs for the token, and also keeping our own liquidity dynamic in times of high, let's say in times of malicious activity on the market. So if we see attacks coming at us, we need to increase our treasury cash holdings. So usually it's like 90-10%, 90% real estate, 10% cash. But in times of high market movements, or we see somebody attacking, we will increase our cash reserves. Because ultimately, you really have, sometimes you only have that cash to fight against any malicious attacks on the peg. And yeah, but then currently we are, I think, key point to want you to take away here is also that we are building the infrastructure, right? As you can probably tell already, we're building the foundation, we're building the infrastructure. We're not selling directly to the retail. We are creating a different asset class. It's a new asset class. And then that infrastructure needs to live currently with us, but later without us also. So that's the whole concept here. And yeah, I'll maybe have some questions about any of these things.
Coming back,
If there is expectation of profit
isn't it a security?
Yeah, so expectation of profit is we don't sell this for you so that you can make profit necessarily, right? So it's not our sales argument. Our sales argument, this is a stable asset class. It's a means of payment. Now, naturally, real estate generates yield, so it's not a secret that that yield gets reinvested and the face value of the token goes up. But it's not something that is necessarily guaranteed, but it is usually commercial real estate does that, right?
Yeah, so if you're looking option to invest, then the Redcurry token is not that there are plenty of other options where you can invest, even straight investment to the real estate. Redcurry doesn't give you so much like yield and the usual straight investment into the real estate. But you can, as it is like store of wealth or store of value or payment methods, you can imagine what else you can do with that. And there are plenty of like financial instruments where you can use it as a collateral, for example, but this is like responsibility of the community.
When less profit than invest directly?
Because again, it's not for investment.
I can tell you a bit about like the real estate policy or investment policy. It's basically long-term, low risk, and then what automatically translates that we are not chasing short-term, mid-term gains in terms of higher yields. So we will chase on the markets basically the lowest yielding real estates that who have the most stable tenant base, and so that's why if you start to compare these two, then our investment strategy, portfolio investment strategy behind the whole, let's say that the whole system that backs the Redcurry, and then go to the real estate market and do your, and if you are capable to do these kind of direct real estate investments, then these options are probably higher yielding. So
the irony here is also that these rates and ETFs that your exposure to real estate, they do sometimes kind of offer you some yield that is not the reality, right? If you look into it, or when you do direct real estate investments yourself, those who have done it, you know, if you start calculating, if things take more time, the construction takes more time, and then you divide it by the years, you're not really reaching that yield that they promise anyway. We are not promising you high yields. That's not what we are here for. We can say throw out some numbers that this commercial real estate will generate yearly that we've seen following the statistics and history, and there it is positive, so that's good. So it goes up, but the whole core concept is that it will not go down. You will not lose value. That value will carry, as long as the commercial real estate has been on the market, which is one of the oldest asset classes in the world, and with the most secure, and you can check the statistics yourself.
Yeah, there are fun facts about the last, let's say, 30 years in commercial real estate in Europe, Central Europe. It's quite interesting if you dig into the data and then see how it works and how well it works.
You were saying that you're selling X basically. Real estate has a yield.
It's an asset that I can also make money with these investments, and I'm buying the token to basically make this transaction. And you're stating that you are not selling the yield. You're not selling
not directly the yield.
How the yield works basically is that, so our net asset value, let's say, let's bring an example. We have 5 properties, let's say, right, and worth 10 million euros, for example. Okay, so now we mint 10 million tokens, so one token is €1, let's say. Now, if we buy more real estate or make new investments, we obviously need to mint more tokens, okay? But if we don't do any extra investments, then these 10 real estates, they generate cash flow, right? Let's say 4%, let's say, okay, year. So that 4% in cash, we reinvest in. It goes directly into the net asset value, but we don't mint anything else. So that 4% translates 4% growth for the token as well. So, but we are not running the fund necessarily to make you the highest deals.
Mm-hmm. Yeah.
Thank you. So how do you reinvest it then? Do you take the money that you get from the rent of the real estate, and do you then buy the same Redcurry token for the price to go up, or what does it mean that you reinvest the profits?
Yeah,
We reinvest it into, well, kind of extend our portfolio, reinvest it into the new properties.
But if you invest it into new properties, then everybody else who already had some tokens, you're basically minting new tokens that I don't get.
no, so it's a closed system, right?
It's a closed system.
So let's imagine a treasury. It consists of properties and cash. If I move that cash inside of this treasury, if I convert that cash into property, the total net asset value doesn't change. So we don't change the supply either. Like cash and the entire treasury can be considered as one. Right? How we run the treasury in a healthy way, we need to have there mostly properties and then a certain amount of cash, right? But if we move that cash into properties, the total net asset value doesn't change. You don't need to mint we don't mint more, so that the face value will go up.
We only mint more if fresh cash, not from these properties.
Outside from
if
the
we have a
treasury
kind of
comes in.
minting event, let's say that we bring in new 10 million, then we mint new Redcurries too.
Okay.
Only then.
Okay.
Otherwise,
So if you have 10 million euros worth of real estate, which generates profits, you take these profits, you buy new real estate, you don't mint any new tokens, and because you bought new real estate, the total pot that is backing the Redcurry currency, the value of it decreases, which makes the price of my token go up.
Yeah.
Okay, I got
It actually increases immediately. So net asset value is for the treasury, and the treasury can consist of both cash and properties. Right? So yeah, that's how it works.
Okay, I have one more question from online, and the question was, have you thought about alternative business cases like gathering the pool to offer decentralized means to finance the purchase property? I think what they mean here is that, have you thought about an idea where people buy your token let's say 10 million euros worth of your token is bought, and you use this token just to buy real estate? Have you thought about this?
Basically, well, that brings us to the use cases, and then eventually partial bringing liquidity to the real estate can be one of the use cases. Either like partially someone exiting from portfolio and our foundation entering the portfolio, and then instead of fresh cash coming into the system, property comes into the system or portfolio comes into the system, and then we mint new Redcurry. So yes, eventually this kind of a use case is there.
Or for example, another use case, there is plenty of tokenized real estate startups, which are taking the pieces of the real estate and tokenize it. And those could be our partners, where we can buy the tokens of the actual real estate and then include those into our portfolio.
And just to add on that, one of the use cases that we're looking currently very actively into is rental deposits. So in the commercial space, you see in the Europe around like 50 million.
I have even a slide for that I can show you.
Yeah, like 50 million euros sitting in rental deposits, and they're usually, the contracts are average 5 years. So yeah, so basically across the Eurozone, it's 50 billion just sitting in bank accounts for waiting on rental deposits. Now, quite often this is not realized, but it loses its value over 5 years.
We just rented our office,
yeah.
And now after 5 years, okay, we get our couple of €1,000 back, but considering today's inflation rate, we will probably buy a cup of coffee or something.
Everybody loses on that transaction, because the landlord, for them it doesn't matter much, but for the one who is paying, for the tenant, that's can be quite a hefty sum of money if you're paying a lot of that deposits. At the same time, the landlord can create a situation where instead of you paying in cash, in euro, you pay the rental deposits in Redcurry. For the landlord, if something happens, they need to exercise that deposit. They can sell it and convert it into cash and use it. But if they don't need to use it, then they just give it back to you after 5 years, and it has maintained its value or even increased. most
removes indexation. If you're familiar with commercial real estate agreements or even residential real estate agreements, if they're longer term, there is always indexation built into. So that takes us, if you put into like sequence our use cases, obviously, first of all, we do this store of wealth, store of value element, and then you can just keep it temporarily for your liquidity, and then it can become alternative asset in crypto space. It can become lending collateral, and from there we see in the real world the biggest use cases are deposit, and around that we have withhelds in real estate sector, which are the basically takes us to the, let's say, professional real estate sector, where you have withhelds in development, and so some money that is kept for guarantee, for example, etc. These kind of use cases there, and that from there, from deposit money, we also get to the rental payments. So there are many places where we can basically use it. And then, but starting from the biggest sector, just keep some of the liquidity in Redcurry, because there is like 12 trillion in cash laying around in EU in people's bank accounts.
Question from online: who's your main competitors?
It's a good question. Yeah, we obviously compare probably with closest who we compare to in let's say if we look in crypto space are the gold tokens.
With a big
tokens,
but they are securities.
Yeah, they are securities.
Yeah, they're fractional ownership still.
Yeah, and then so, but they are kind of closest. Stable coins, we are not stable coins in that sense.
Tell me about exit. You know, I enter with million. Now after a year, I want to exit. You have to burn those million tokens. You then have to sell real estate, or
no, ideally not, because it's a like we said, just real estate sector is very slow paced, and then that is the worst case scenario. If something happens and we start to liquidate, then we start buying everything back, and then everyone gets their money back, obviously. But it's just a slow process. No, ideally the whole. That's where the DAO comes in. Also, it's the growing, increasing liquidity pool that we intend to build. That it would also would be able to handle big withdrawals and
market should accept that if you want to exit. It's the same if you want to convert your Tether to Bitcoin. Tether doesn't have to burn their cash.
Yes.
So it's the same. But of course, for that you need market depth, and that market making comes in. And this is where.
How much time do we have?
Yeah.
Like 5 to 10 more minutes. So if you have something important.
Yeah. Quick question.
Really? So the treasury consists of mainly, let's say 90% real estate, which can itself divide into carefully selected fund shares, evergreen fund, or direct properties. So it's a little bit of how do we go to market? What's our strategy there? So obviously it's easier to get into evergreen funds. It's harder to directly. You need more cash to go directly into, and time to go into properties. So that's how we're playing this. But mostly it's these two. It can be in the future tokenized real estate as well. Doesn't have to be. Currently, it's not on the table, but it can be.
Yeah, I just want to ask, how would you put cash on distributed ledger, as you said, like, and is it even like legal if I invest in real estate cash?
Yeah. So just to reiterate, whatever is in the treasury doesn't directly have to be on the blockchain. It doesn't have to be tokenized per se. We are not tokenizing the real estate either. What we are doing is we are showing everybody what we have in the treasury via the means of public ledger, right? Because it doesn't transport ownership, then we don't need to solve for that either. It's only to showcase what we have in the treasury. And that is to create a transparency layer. And then people trust that what we publish, because it's published by a decentralized group of people and it's being officially audited. Every single asset that you see in our ledger is also referencing for the off-chain databases like governmental or land registries or etc. So, but it's purely to just give you a window into the treasury, which will otherwise, what would it otherwise be? I'll send you an outtake from Microsoft BI of our accounting data for the past 3 years. Try to go through that, it's not too loud.
But isn't it's your purpose to like get away, spend the cash basically, and if you have cash, it's losing value, and if
Yes,
you invest it,
well,
so why do you have cash?
In the real estate business, you always have some cash. You can't. That is the problem for ourselves too. That we don't have good liquid assets where we would like to store the cash. And then always rent. Obviously, rent currently comes in cash. So you collect your this element, even just it on its own is.
Do you have some ceiling for that, or?
Yes.
Yes.
The ceiling is currently being worked out with people smarter than me in economics. But yes, that is also in public information and will be all published.
Okay, thank you.
So yeah, like Neeme said previously, the whole tokenomics and the whole like structure of the Redcurry is currently built like more basically let's say the centralization factor is bigger. We have more the processes is like centralized and decentralized, and this have to be so that we have more control until the whole system will stabilize enough to turn more into the decentralized way of leading process and doing building the whole infrastructure. But to achieve that, we have to have like a kind of way how to delegate still control to somewhere. And how to do that is, this is called DAO, Decentralized Autonomous Organization. And we are currently now designing that the whole DAO structure top of the Redcurry. It's built so that it's kind of like let's say Redcurry system or structure can work without the DAO. It's independent from the DAO. But the DAO governance token, it's like separate token system. It needs Redcurry to work by itself. It's technically it's utility token. It doesn't have any value. It doesn't work without the Redcurry. And the goal of the DAO is basically gradually give more and more control to the community, and basically through the two mechanisms, proposing proposals and voting different decision-making processes to influence, for example, fee levels or development process, the development directions, and yeah, the other factors which might change the sustainability of the whole Redcurry system. And besides that, the DAO token has a role in liquidity pools to offer the liquidity, extra liquidity for the Redcurry token and for the DAO token itself. And it has a staking function and rewards and punishment system as well. So yeah, that's about the DAO system. Do you have any questions about the DAO? Yeah.
Yeah, I actually had a lot of questions along the way, but coming to the DAO, I mean, I think in the beginning you mentioned that the DAO will eventually be also choosing the managers of this foundation and stuff like that. So kind of looking at, again, coming back to the first question, is it a security? A kind of literal definition of a security. Is this token similar to kind of a share? And the share allows you to choose the manager of a legal entity. So kind of by, yeah, sorry. Sorry if I'm being too...
No. We can't confuse the two things. So DAO token is completely separate from Redcurry token.
Yeah, and two separate organizations.
Yeah, you don't have any influence over the organization with Redcurry token. So let's say you have 100 euros in your wallet. You go to the central bank and you say, let's change the director. That's not going to work.
Yeah, but I'm talking about the specific utility token. So it will be given to the community.
Yeah.
Presumably it will either be sold or just given to some, I don't know, users for being active or something like that. so kind of to me it seems like at least that utility token now is a security. So yeah, like I'm a lawyer, I actually work with like these tokenization projects all the time, and like looking at this, it seems either that this would go under a prospectus or would be considered an investment funds either here or in the US. Like legal, it looks like quite difficult for you to manage.
Yeah, with the DAO part, we are even basically ready, or we are okay if it's considered by the end of the day considered a security. This is for us in that sense on the table. And that is the main reason also that we keep them really separate. The DAO structure legally and the whole Redcurry tokenomics foundation structure that issues the Redcurry to not to give room for these kind of how to call it, like interpretations, because yeah, that it's critical. I agree. And
you guys
we
have
would love to have a coffee with you later.
You have 3 more minutes. You have 3 more minutes, and then we have a break for 10 minutes. But I wanted to ask you for the next 3 minutes. Can you maybe go into? Are you guys live, or when will you go live, or like what's the next steps?
That's basically we have been working now a bit around a year, and the legal structure is ready. There are a lot of research and documentation is ready, and basically coming months we are ready to go live, and currently we are in a situation where we are closing our equity rounds, which is 500K, from where 200K is committed, and another 200 is top committed. So 100 is still available basically, or 150 is available. And when we are finishing this first equity round, besides equity, it's a good opportunity because besides equity, we will give the DAO tokens as well for the first investors. But after the equity round, there will be only DAO token private sale, and then after around a year, DAO token public sale. So currently, we are accepting the equity investments, and if somebody really wish, then we are open for the really like pre-private DAO token sale as well, because for the equity investors, the level is a little bit higher. The ticket size is 50K. For the DAO token pre-sale, it's 10K.
But yeah, Redcurry will be live in
Q1
next year.
So first Redcurry will be minted in Q1 next year in terms of roadmap, and then during I think the end phases of the DAO token private sale, which will go on around 6 months, then we will start really putting in place the DAO, so we can launch the DAO next year as well. But as Asse already says, these things are moving on 2 different trains and 2 different tracks. So Redcurry will leave it on its own, whatever the DAO does, but we wish to see them merge someday. If not merge, then at least have some sort of more connection with each other.
And please follow us on the LinkedIn and Telegram group.
And redcurry.co.
Redcurry.co.
You can go on our site and then sign up. Then you can follow everything that we're doing.
And all welcome to join the journey.
Okay, thank you.
Thank you.
Thank you so much for watching the video. I hope really that you guys liked it. Hit the like button and subscribe. See you in the next one.